If you're like me, you probably woke up to a sea of red in your investment portfolio. In this video, we're going to break down the key reasons why we are seeing such a big correction right now in the stock market. As always, nothing in this video is financial advice, and I myself am not a licensed financial advisor. This is strictly opinion and what I do might not work best for you. The first thing that we're going to be looking at in this video is the recent jobs report. In the July jobs report, there was 114,000 jobs added when a suspected 175,000 jobs were supposed to be added. This is a 35% decline from expectations. And on top of that, we also experienced a 0.2% increase in the unemployment rate from June. This is also the highest level since October 2021. We also saw an average hourly earnings increase by 0.2%. Now, I don't think that this really has as big of an impact as anything else, but it also doesn't really help. The July jobs report underscores that the labor market is moderating, making September rate cut from the Federal Reserve even more likely. So at least here, they're kind of giving a little bit of direction on what's happening, because as of this month, the Fed decided not to do anything with rates, leading to a lot of uncertainty. So it is kind of leading up to next month. And to add a little bit more fuel to the fire, it is also tech earnings season. And if you've been paying any sort of attention to the stock market, you know that tech has been going crazy. And we've kind of all been wondering, when is it going to stop? As you can see from the graph provided to us by Financial Times, you can see towards the end of July, tech started to take a little bit of a dip. I think this is something that a lot of us had saw coming for a little bit of time now, or at least just a little bit of a correction. According to Financial Times, only Apple and Tesla saw a rise in their market cap in July. I think that some investors are starting to get a little bit worried with the AI and tech industry due to a few factors. I think one of the biggest is that there's nearly a $1 trillion projection from these companies to invest into AI, and not a whole lot has come from it yet. I think some investors are wanting stronger earning reports on that amount of money. Now, if a bad jobs report and mixed earnings wasn't enough, you also have the things that are currently going on in the world, such as wars and the American elections. Now, we're going to make a whole separate video on the election specifically, but now the war aspect is something that it's kind of hard to talk about, because obviously nobody wants to see war and nobody knows how that's going to play out, but there is a lot of fear growing in the market over this. All of this just adds a lot of uncertainty, and I think some people are starting to get scared, and they, in their mind, are playing it safe by pulling out their money. Now, I myself am not doing this. I believe that a correction is long overdue, and I think that a lot of us saw this coming for a while, and I am going to try and capitalize on it by investing small portions over a longer period of time. For you, it is always important to do your own research before you invest and or speak with a licensed financial advisor. Staying up to date and keeping track of what is currently going on can help you make better decisions for your investments. If this video helped you at all, make sure to like, comment, and subscribe, and we will see you in the next one.